Hey guys, this is a market update. We are sleepwalking into a complete disaster, and let me explain what I mean throughout this video. Looking at the Bitcoin price right now, you can see that we are still firmly within this very long-term, 12, 13-month downtrend for BTC, but everything is changing right now. The data is showing us this, and we need to get ahead of what's happening. So you can see these kind of 3 or 4 month mini cycles, right? Where you get this kind of relief and you know, just a 3 or 4 month pause between something else happening. And we're at a very key stage right now in terms of the Bitcoin cycle and the market cycle, which I want to look at. We can see that every time we have a little bit of strength into this 100 period moving average, every time that we come up to this, we just get sold off once more. And you can see we're trying to fight into this moving average again, but even so, every high is a little bit lower, so firmly within this downtrend. Over the next 3 to 6 months, the entire market landscape is going to change, and so I want to look through what is actually going to happen. If you are a short-term trader, up to $8,000 deposit bonus on BitGet. They're also doing 0 commission spot trading right now, so you can buy Bitcoin and crypto and then take that out to your wallet. Link in the description for that. Central banks worldwide are screaming that they are going to raise rates for the rest of eternity. Nothing is going to stop them battling inflation. But let's have a look at the forward-looking data, because remember when they said inflation was transitory and that it was fine and they didn't have to raise rates? That was the time to sell, not to buy. They mugged everyone off then, and they're going to do the same once more right now. So let's look at this. This is the housing survey, the housing sentiment survey over in the States, and it is very important to watch. We are now just 1 point above the absolute crash during the pandemic. Now, during that time, central banks stepped in with unprecedented monetary easing and lowering of rates, mainly because the impending recession. Now, what that had was obviously a completely unpredictable pandemic, and people didn't know what was going to happen, and they knew for certain that there would be a large recession and a drop-off in economic activity. The housing market sentiment survey is showing that a similar amount of reduction in economic activity and wealth is happening right now. Now, the difference now is that rates are extremely high from central banks saying that they are still fighting inflation in the past. But what's happening now in the future is scary over the next 3 to 6 months. Look at this sentiment survey right here. Very, very bad. Now also look at the sentiment survey in black, which seems to be a leading indicator for unemployment rates. This is very important to understand central bank policy, especially in the US. We can see from this chart that it seems like the sentiment survey seems to lead unemployment by a few months or so. Now you can see back here during this period, the sentiment survey actually tried a double top. It didn't rise as much as the previous high, showed relative weakness, started to drop off, and then as you can see, a while after, the actual unemployment rate starts to drop off. You can also see that on this occasion where the sentiment housing survey drops off significantly, and a few months after you see a massive drop off in employment. Now we fast forward to recent times, we have the pandemic right here. That sentiment survey, very, very different, because you know, the whole thing was kind of unpredictable. But what we're seeing on this cycle as well right here at the end of 22 is the housing sentiment survey dropping off a cliff, and unemployment just right here. Now, if this is a leading indicator, what could be suggested is that a very violent rise in unemployment is to be upon us. Now, remember the Fed's 2 mandates. Price stability failed. Unemployment. They need full employment. That is one of their mandates, is to have full employment. So what happens when both of those things have failed? What happens when employment starts to tick up is that the Fed just cannot lie anymore and cannot tell us that they're fighting inflation, because as soon as the joblessness rate ticks up, that is an indicator that growth and inflation have been completely destroyed. And so it looks like this is going to happen. So there's going to be a massive amount of volatility, in my opinion, within the next 6 months. Basically that recession that we're going to be going through. Now, in my opinion, if we can get through this recession without some wider financial contagion in the traditional markets, then it will be able to be gotten through. The risk that no one can ever predict is something blows up, just like happened in 2008. For the most part, banks are much more well capitalized than they were then. And so that risk is way lower, but there are other parts of the market that no one has their eye on, and that's usually the part that blows up. If we can get through a recession without some sort of financial contagion, then it may actually be much less worse than, the worst case scenario. What we also need to see is the actual market for treasuries right here, which is also indicating that within the next year, rates are just done and that it will start falling off as growth and inflation starts to come down. So central banks around the world have kept on telling us that they think there is a path for a mild recession and a soft landing. It's absolute garbage. They have specifically tried to raise rates as hard and as fast as possible in order to get inflation destroyed before the unemployment data comes in, because once unemployment data comes in, it's very difficult for them to justify any more rate hikes or rises or any kind of hawkishness. And so this is what they've done. As you can see, the real treasury yield curve is telling us that within the next few months or 6 months, this is the 1 year, but it's really pricing in short-term rates, is that it believes within the next year we've seen the absolute peak of rates and they'll start coming down. So the housing survey is a potentially leading indicator to unemployment as well. The Fed saying that unemployment will tick up about 1%. They're always wrong on that. It's always more than they predict. And so that is the uncertainty over the next 3 to 6 months. As this recession hits, will inflation get completely quashed? And if so, how will central banks react further? Remember, they say one thing, but they actually do another. This is also tying in right now to the Bitcoin cycle, which this is an incredible chart, and the 3 previous cycles, as you can see here, all seem to bottom out at the exact same time, which is absolutely insane. We know we have a 4-year cycle on Bitcoin, but there's also a cycle for the economy and for money supply as well. We can see we're right down here in this MVRVT. So this is market value to realized value temperature index per halving. You can see 1, 2, and 3 cycles right here, on each occasion bottoming out around this time. If you've been watching any of the previous videos, you've seen many different types of analysis and chart that are all showing us that we are within that buy zone. We're in the accumulation zone. We're in the zone of a bottoming out process. Although macro is going to really dictate how low the actual price can go, because the price can go a lot lower from here and still be in the bottoming zone. All of these are actually kind of relative values in terms of where the price was from the high. And so depressions, recessions, and other things can definitely prolong and make worse any drawdowns. But it's incredible to see how Bitcoin halving cycles really do give us a great insight into where to accumulate and where to actually maybe offload some profits if they occur in the next halving cycle. Whilst it seems obvious that we are in the bottom of this cycle, there's many unknowns. And so Bitcoin is not going to ever reach higher highs and higher lows until a lot of the uncertainties are out of the way, which is how high will rates go, how bad will the recession be, and will inflation come down. With uncertainty comes weak markets, and so that's where we are with BTC right now. If you're a long-term investor, these bottom areas of the market are when people DCA, but a lot of uncertainty here into the actual price right now, especially over the next 6 months. If you're a short-term trader, you can take advantage of that. Up to $8,000 deposit bonus on BitGet, 0 commission spot trading, so you can buy crypto, take it out to your self-hosted wallet as well. Link in the description for that. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.